Well, what is going on, guys? Luke here today, and well, the market is just disgusting out there. I mean, new 52-week lows everywhere. We have oil going just nuts. We got the Ukraine situation, and the Fed seemingly more out of control than ever. And that's all before the Fed even starts raising rates. Can you afford to continue to bleed red every day? And will it ever stop? I mean, basically, is it time to sell and just run? Well, since I have been through every crash from the tech bubble forward, I will give you the truth on where you can win massively, but also where you will lose massively if you make these mistakes. But I also have an urgent warning for you as an investor that you must hear, or none of this will matter, but I will lay out the solution too, so you can navigate this confidently. I just ask in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. And are you against having a team of investors, including me, working directly with you as we navigate these ridiculously crazy times? If not, then you need to know the flash sale ends tomorrow to join the Market Insiders private group, and the prices will never be lower than this again. You get full and direct access to me and a group of 6 to 7 figure investors, and you get access to 4 courses for free that teach you how to plan, do evaluation, build up your cash, and you get to see my watch list with price targets, my buy and sell alerts. We got live weekly Q&As that happen a lot more than weekly, honestly. We got exclusive videos and a ton more, so check out the pinned comment. And before blasting me for promoting it, I have no ads, no sponsors. This is what YouTube pays me in a month, and I give half of that and half the group's proceeds to charity. So the tech bubble was my first real crash that I experienced that I was invested in. Everything before then was 40% gains in my portfolio, followed by 70% gains, followed by 85% gains, and I was on my way to being rich. I mean, stocks were easy. There's no need for valuations or due diligence or anything else. Just jump on the hot stocks and ride to the moon. And comment down below if that sounds familiar to any of you guys out there over the past year or two. Then you know exactly what happened next. The tech bubble popped. Valuations mattered again. Due diligence really mattered. Planning mattered, and of course, preparation mattered a lot. So during this crash, after I lost more than 50% of my money, taking me to the same point where we are at today, that is when I made many critical mistakes. I made the mistake of selling out completely because stocks only go down, and I'm going to take my loss and buy back in cheaper. Except I had no idea when stocks were actually cheaper or on a discount, because I didn't do valuations at all, so I was too afraid to buy when stocks were at their all-time lows and just a complete steal. I made the mistake of not buying Amazon 90% off and a ton of other great stocks that I liked and wanted to own because I did not put in the work, and then I let my emotions dictate my decisions and I listened to the media, which would be the same as listening to the fear narrative in the media today or the fear narrative on YouTube or wherever. Bottom line, I could not have handled this any worse. I literally made every mistake you could make. After all that happened, I knew I had messed it all up and I needed to get better and put in the work, and that is what I did. So when the next crash happened, the financial crisis, where the entire financial system almost melted down completely, I was ready. When the market got overheated prior to the financial crisis and valuations got way out of whack before the crash, I was not buying. Now, let me be clear, I had zero idea what was going on. I mean, zero. I just knew prices were out of whack and would correct back. The math is the math, and valuations always eventually matter in stocks. And then the financial crisis actually hit, and it lasted for years. I mean, not months, it lasted for years. I was still down, but not as bad or as fast as before because I bought based on valuation and avoided buying at the highs and instead pooled cash that I could now distribute into stocks. A huge mistake that many make is buying at those highs instead of being okay with just holding cash and waiting. It is really hard to be patient when everyone is 10xing their money every week. I understand that completely. It is very hard. But those same people right now today are down 60%, 70%, or even more in some cases, so patience absolutely pays off. And more importantly, those people are not able to buy because they didn't pull the cash, so patience definitely pays off. And because I had done valuations on everything, I knew when stocks were on discount and then on super discount. Now, did I buy too early or time the bottom or anything else? Yes, I absolutely did buy too early. I always buy and then it always dips. That's simply true back then and it's simply true today. I did not time the bottom on a single stock I bought back then. Not a single one, not even close to timing that bottom. I bought before the bottom, after the new low was set, and after they bottomed again. Each time I had cash that wasn't going to real estate, it went into the stocks that I wanted to own that were great companies. Now, I was down for close to 2 years, and I looked dumb, I was bleeding everywhere, I didn't time a single purchase anywhere near close to the bottom. And yet I made more money in the first year or so coming out of all that than I had in my entire life, including all my paychecks, and that was years before most people even began dipping their toes back into the market. Now, don't get me wrong, I missed on some of my picks. I've made a video about my wonderful GE investment that I just completely whiffed on. I literally could have put my money anywhere else and probably made 10 times the amount of money. But the bottom line was, it didn't matter over the long run across my portfolio. It was an unbelievable, once-in-a-lifetime chance to buy stocks on an incredible discount. So now, I have been following this same playbook this downturn as well. I'm not worried about timing the market. I know I cannot do it, so I'm just strategically buying great stocks. And I know the more beat down stocks get, the more money we will make coming out of it, so I almost wanting it to do that, as I know I'm patient, will be buying, and will be riding the wave that inevitably comes. The biggest fortunes are made during the crashes, not during the inevitable ride up afterwards. But there is also a warning I want to give you guys today, but don't worry, I will tell you exactly how to handle that too. But the warning is this: the fear, the noise, the intensity of the messages are going to get worse over the next few weeks and carry into the Fed meeting and beyond. It will be far scarier out there than it should be, and you are going to hear it everywhere, especially as the companies continue to adjust their guidance. If you decide to fall into the fear and listen to the noise, you will make mistakes, you will miss opportunities, and ultimately you will be left with regret. You are in for some real pain. So how exactly do you overcome that challenge? Well, this is exactly what I am doing. I already have a plan laid out that serves not only my stock goals, but my wealth goals, my retirement plan, and my overall life plan. Build one if you don't have one. We covered that in the group, but you can find it on YouTube or just Google it too. Find the information and start there. You also need to have your cash position ready. I have roughly 30% in cash, and I have other instruments in place if I need more cash, along with my money loops that consistently replenish my investing account. You also need to know exactly what stocks you want to buy and know the price target you want to buy at. In a crash scenario, you want to buy great stocks at undervalued prices, but you cannot do that unless you have done a real valuation on each stock so you know exactly when a stock is on a discount. And finally, just execute your plan. Be willing to pull the trigger. Plan for if you buy and it keeps dipping. Understand it may not recover as fast as you want, so you gotta be patient. And remember, the longer it stays down, the more you can add to great stocks at great prices. So when it runs back up, which it always does over the long run if you pick great stocks, you will have plenty of shares and get to enjoy the run instead of having FOMO like most people will have. So click right over here if you want a blueprint for doing exactly what we just talked about, or click the other video if you want to know which YouTubers I think are the best, and actually their stock picks too. So thanks for watching, and we'll see you in the next one.